help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we're going to talk about some patterns that are starting to emerge. It looks like things are stabilizing fairly quickly. So let's get into tonight's video. Welcome, everyone. Well, we had a pretty good day. Everything was at an extreme. Once again, that 6850 number I've been talking about for months, basis the S&P, continues to be like a magnet. We got all the way back above it. We're trading at 6889 right now. Massive rally. We were trading not quite at the extremes that we did yesterday, but we got down into approximately the S3 level. So pretty decent decline. So, and then the reversal again. So we had 2 days of reversals. One of the things that it's been a broken record and it continues. This sideways choppy range, we'll go through it again, just continues to go on. All of the doomsayers, I know there are a lot of people who are so hopeful that this war with Iran would crush the markets and they could be right on predicting this collapse in the markets. Well, it's not happening. And I'm just thinking about some things I used to say. Yeah, and I don't see, other than we see crude elevated, and I think it's about to top out. We didn't get a really hard turnaround, but there's still enough noise out there with the war to keep things elevated as far as the crude goes. Or it's going to have to be some signs, maybe a ceasefire or something. There's things are all over the board. There's people that said that the Iran's been preparing for this for 20 years for the war with the U.S. and maybe so. We'll see how it all plays out. We'll see if the big attack is not there yet. We'll see what happens. But I don't think the markets care much, and this has been the case. I know a lot of folks want to play up this situation. I told you they play the inflation card as hard as they can with crude oil. We got the 10-year to trade up to 412, and it basically looked like a very climactic move on the selling of the treasuries. So that may be over. We'll cover that tonight. But there's overall, market sentiment is just way too positive, and, nothing's changed. We're still going to get a lot of CapEx investment, and everything that was already planned for 2026 is happening. As far as the markets go and expectations, we're not in a parabolic curve. You have to remember 3 years in a row, we had double-digit returns and some very large returns, not just double digits. There was some substantial moves here. And I've talked about this a lot and still seeing a lot of traction. Haven't seen if there's much of a rebound in the database. We'll go through that together. The database is still about to finish. As I told you, keep reminding everybody that I'm going to be coming up here probably between 10 after and 15 after. So make sure you remember that. Just because when our data vendor had some sort of glitch probably a month and a half ago now, they are now delivering the data to get to our database a little bit later. So seems to be about quarter after is a good time to start. So we'll switch our time up closer to 8:15 Eastern to come live, somewhere between 10 and 15. I've been watching things pretty closely. Hopefully they'll get back on the old schedule they were on, but who knows what happened there, So anyway, I think it's fairly impressive the last couple days and the amount of buying that continues to come back in. I've been telling you the buy the dip trade is still on. I think that's the case. I think crude oil is getting close to topping out here. I mean, people are talking 80, 100 dollars. Certainly, with things still ongoing, anything's possible there. But I believe, we're not in the same place. I was thinking back to the night since I've been around so long and in these markets, I've seen a lot of different scrimmages, especially in Strait of Hormuz. That has been a thing forever. That's not the biggest thing as it used to be. There's pipelines. Saudi's got pipelines across the other side over toward the Red Sea. Everybody's got pipelines now. It slows things down. And certainly if you disrupt those channels, things get elongated as far as shipping times and all of that. But I don't think this is as material as people think it was going to be. And so remember, we're still in the scenario I've been talking about, headline, reaction, liquidity, which is the space being filled up. Because when you see these big pops in markets up or down or sell-offs, what happens is liquidity goes away. And there's more sellers than buyers, or more buyers than sellers, and everybody just pulls back. In the old days in the pit, we'd do this, we're out. So I'm not bidding, I'm out. People look at you, just chop it. And so that happens in the digital world. The bids just disappear, or the offers disappear, whatever side that the market's leaning towards. And then the liquidity, once prices get to a certain place, liquidity comes in, rebounds, maybe sometimes another wave of selling comes in, illiquidity, and then liquidity. And that's just how the markets function when you're looking at price discovery in these moments where there's a lot of headlines. So keep that in mind as we go through. So tonight we're going to go through the typical database. Let me just double check it while I'm checking this out here to see if we've got everything finished. It has, let me do one thing here. Okay, it looks like we are completed. All right. All right, so we'll go through the database. We'll just fly through all the markets we normally cover, put questions out there, come up at the end. We'll see what kind of comes up. Hopefully there'll be some good questions. Don't be bashful. Just put them up on a timeline and we'll go. So let's go ahead and just got to set this so we come in on the right screen and be ready to go. All right. All right, so let's take a look here. Get over to the daily screen. So we've got a bit more selling coming in. This was my expectation I talked to you about yesterday. Even with the rebound, we still have net selling coming in. A lot of patterns were broken. Yesterday, when we get as big as move as we saw yesterday, then you're going to break down a lot of patterns and you're going to see things continue on. That's what we're seeing here. Just round numbers, about 900 sells, roughly 275 buys. So negative on both. You can see the sentiment is negative here. And we're at 45.15. We were 48. So key number here is 42. So if we start to see some deterioration below 42%, then we could see some further downside. And since I've started talking, I see the markets are selling off a little bit here. We're trading at the low of the session right as we speak. But this is going to be the number that we're going to watch here to make sure it stays above 42%, something like that is the expectation. We get below that level, and then we're going to be starting to talk about maybe a little more downside retesting the lows that we printed the last couple days. That's going to be a high probability from that standpoint. All right. So this is the configuration that we're looking at here from the standpoint of the S&P still within. This has been a sloppy range going back to January, just zigzagging back and forth, no real pattern. These moving averages are starting to slope just slightly downward. So this may be that we're going to get under the 42% on the WaveTech short-term models, and we may just continue to move towards this convergence over here, which, if everything plays out like it looks like it should, then you're going to get, move towards 6,800. We've been down to these ranges. I'm going to zoom in. There are some new Fibonacci targets that came out today, projecting down towards this 200-day moving average, and that's certainly possible. But even if we come down here, you're looking at, around, I mentioned this 66 level. I think we probably work our way in this wedge. There's certainly will most likely be a while before there's anything that is positive enough that we could consider being bullish or bearish. And this thing that we're involved in Iran is going to just have to play out, and there's no way around that. And so it's going to be. This has been a tough start to the year, especially after what I guess we could go back to last year in April and the big, tariff tantrum, we'll call it, when that happened. That was an opportunity, and then we rallied nearly 50% off the lows from that April low. And so now we're just looking at this drift, and like I said, there's probably a higher level of probability for a negative input just because of the war that's going on. But just equally, they could come up and say, okay, ceasefire, we're going to work this out. And Trump gets another win, and we go on and we start talking about whatever is going on. But it doesn't look very promising. I'm going to go out to the weekly charts just for a second here, just to bring in this perspective. And this probably tells the story, this zigzagging that we've been going on. This goes back, it all started in October. But even though we've been zigzagging, we're still slightly higher. So that's that underlying bid I talk about. That's if we were to review the weekly models. The weekly models are still very positive, up in the 65% range. So there's just a lot of more stocks trending up than down. In fact, it's close to 7 out of 10 stocks are in intermediate trend mode. So you can see after what looks like a flat period, even the red dots are picking this up. So I've seen some questions around, I think it was maybe it was on Discord, but to set up this red dots like I have, I'm using the inputs. You just go to any of the WTARs, any one of them, and you just change the settings. And this one here is right now set on 1. A lot of times I'll have this on 3. This smooths it out a little bit. And so you just set the input, the period of the SMA to 3, and I've got this out, model coefficient 130, future bars are 8, so I'm looking 8 bars out. And then the past bars increments, model coefficients, increments of 3. It's interesting, just where this 3 number came out many years ago, we were using, many years, like in the 80s, we were using a 3-day moving average for a place to kind of look at. And that's basically what this is. This is forward forecasting what the 3 days going to look like. But, and this is 3 weeks. In this case, this is a weekly chart, but just want to show you how to set that up. But this pattern right here, I mean, that's just a lot of noise, and the steepness, the angle of attack of these moving averages just tell us that this is not, by the way, the configuration that we're going to get a giant collapse out of, especially when we look at the indicators and they're just stable here. And in fact, trying to weaken a little bit on the longer term, but probably the extreme I'm going to go with in this pattern right now would be getting down to the 40-week, which would be 66.50, something like that. And I mentioned the possibilities. Typically, if you have an objective 66, it's going to exceed those objectives. So probably 66 handle to 65. We're about to have a rollover, and the premiums are fairly big on the rollover. So we've got a couple more weeks till we roll over to the June contract. So we'll get that premium in there. Will show up, and that's going to even further signal that we're not going to go that much below those numbers just because of that premium, unless something drastically changes economically. I don't see anything change. Even the mortgage apps were up big today. Everything's coming in better. So, you know, this is just where we are. And so far, it was pretty interesting. With the one more low here, I want to show you something on this weekly. I put out the weekly numbers on the Substack. And by the way, I'm pretty disappointed. I've been with the data sheets and the way they're being delivered right now, because the way Substack is, when I drop those images in, I don't like, if you're on a hand, like a phone, it's pretty hard to use those darn data sheets. And there's some amazing information. I really struggle with the platform of Substack, but you can usually go to a desktop and read it, or you can click on the image and you can scroll through every image on, and you can just blow them up and have to zoom in on them. Like I said, it's somewhat disappointing right now from trying to get those images out in a fair way. So if you happen to know how to, if you deal with Substack and you know how to make those images a better way than what I'm doing it, please feel free to comment on Substack or send me an email at info@kendallreport.com, whatever works there. So let's go ahead. We'll just stay at this level. Let's go to NASDAQ, take a look. We're bouncing off this 40. This is still weekly. Bounced right off that 40 week. And it is showing signs that potential loss of momentum. But even if we come down here, you can, if you look off to the right where my cursor is, let me blow this up a little bit. You'll see, even if I come over here to we're still 0.25 positive on this, which is still trend mode. Even though the indicator's trending down, this tells us there's some loss of momentum, but even when we look over here, we're still in pretty good shape all the way over. Let me just see where we are here. All the way into June, that the steepness of the angle of attack is staying in place. So it's just telling us that there's still a lot of intermediate momentum here. The dailies are completely sideways chop. So I want to address this. Let me do one thing before we go on, and I apologize because I want to go back to the E-mini S&P real quick because I want to show you these new fib targets. So they are 66. So this kind of confirms what I was telling you. I'll blow this up. So on the far right-hand side, you'll see 66.92, 65.80, 65.12. So that's basically being projected to come toward this 200 day. So back to NASDAQ. Sorry to flop you around like that. We're already hitting on the daily. We've already hit the 200 2 days ago. We get nice reversal yesterday, but similar numbers from the percentage wise. 23, 385. Let me blow that up so you can see it over on the far right. 23, 385, 22, 580, and 22, we'll call it 22,000 even. I don't think we get to those levels. I think this angle of attack is strong enough here at the 200 to maintain. So this print that we got a couple of days ago is probably going to be the bottom there, 24, 300. We'll round it off. Nice reversal yesterday. Most likely we're going to just continue in this range. We did get one more thing. I want to zoom in a bit. As we did get a volatility starting to get an increase in volatility after the last 3 sessions, call it 4, we can go back. And so it's not too extreme yet, but it is suggesting that we're going to stay within that volatility range for the next several days. We're probably looking at 3 to 5 days, so into probably next Monday, Tuesday as it plays out, since we're coming into Thursday. But it just looks like we're stuck in everything. If the convergence of these moving averages have watched us, and the projections are pretty accurate. Here's 24,800. We'll call it 24,500. Everything looks to me like it's a squeeze play right now from the standpoint. All these indexes are coming together at that level. Somebody did. I don't think we sell. They've been embargoed. Somebody's asking question. We sell weapons to Iran. I don't think so. They've been in sanction for 40 years. I don't think any of that's ever happened. Okay, hopefully not. Who knows though? We did have. What we did do though is Obama gave a whole lot of money to finance the terror for many years. In cash. That's kind of a weird thing, right? Who sends a 747 full of cash to a foreign country? That's not trackable, is it? That's interesting event. All right, so let's just move on here. We'll look at I'll go to RTY, just look at the Russell, take a quick glance at that. This is daily. So everything is in a wedge formation, and this can change fairly quickly, but I have a feeling that maybe there's an argument here that we're seeing distribution patterns setting up here with this sideways, and we could easily see everything come down. Right now we've had for multiple, let's say for about 10 days, we've got these downward fib targets that are out there, and that's right now, that's 25.40, 24.67, and 24.76. So, folks, it's going to get quiet again. I told you, I don't know. I think Streamlabs causes sneezing. So give me 1 minute maximum. I'll be right back. All right. I'm back. Yeah, so I think for the moment, I will say that I think that we've got the rotation trade is sort of off. The Russell probably won't be as weak or as drastic moves on the downside as there has been on that we'll get in the Nasdaq and the S&P, but we're not going up here, folks. And this little wedge that's built here is probably going to give us a little more downside, so probably a retracement of some of that trade. I'm still arguing that we're not going to get any big movements until we get the yield curve to reposition. Pretty much everybody now is bought in. We're not going to get any declines because crude oil's up, but if crude oil comes back into 65 range, which it probably will at some point in time, then everything's going to normalize kind of back to where it was, and then folks will be, I'm still expecting at least 50 to 75 basis points this year. We'll see how it all plays out as we go through this, and does this war actually get over in 4 weeks like it's being projected? And it's we'll call it, all the TDS people are screaming that that Trump is bringing back inflation. Like I said, they're going to play the inflation card as much as they can, and they're going to get away with it for a while. And I would just watch the 10-year. We already printed up to 412. I think the 10-year starts to stabilize, and we'll go through that. We won't cover that tonight, but we're going to go from here. We're going to go to the metals, and the metals have been acting very interesting as well. We'll go to the metals and Bitcoin, then I'll come up and answer questions. I will ask you again, make sure you get some questions up here before I get done here. All right, let's go ahead and let's go to gold. So gold looks like I've been showing you this for a while. Gold looks like it's just going to get a little bit of a volatility bubble here in the last several days. There was a monster sell-off we got the other day, and now we're stabilizing back into these moving averages. So the grid has gotten fairly large because of volatility. If we look at the projected potential range for today, I'll zoom in on this over here. But you're looking at 53.76 to 49. So you're looking at a $4,000 range potential. Most likely will be kind of an R1, S1 pattern, and that would bring it down to 5204 to 5,098, with the last trade here being 51.85 in the middle of all that. So just expect probably S1, R1. If anything, we probably expand down here towards the R2, I'm sorry, S2, which would put us down at 5,040-ish, somewhere down in that range. So, but what we're seeing here on from the algo standpoint and the future projections is really flat, still a slight bias to the upside. So as I mentioned last night, gold has a bit of a different pattern. We'll go to silver here, and silver is really everything's trying to roll over and come down. You can see the red dots are forecasting into the 10-period moving average. You can see the algos are a little more drastic volatility levels. And with this huge move here, a lot of this, when you use this type of predictive math and looking at this, you're going to get this is going to be somewhat of an echo of the past. So it's showing that there's still more downside. I still think we stay above 70, 71 bucks. I don't see getting much below that, staying within the grid. And the only thing, if I go over here to the weekly for just a moment, you'll see, and this was the thing I talked about several weeks ago, you get the big volatility, otherwise the thick orange lines here. Let me bring that up so that these things will collapse in once they normalize. We're still, I'm going to say, a month out, 3 to 5 weeks before this thing stabilizes. We should see them turn back down. And this volatility, once it normalizes, then at that point, we'll be able to determine what type of move we're going to get on silver, whether it's going to go and retest that collapse low, or whether we're going to stabilize and retest some of the key resistance levels. But you can see on the weekly basis, all the way into end of March, we're looking at some downside, and potentially all the way into end of June. So this is a big pattern. So the event that happened in silver was way bigger from a quantitative and a technical basis than what happened in gold. Gold had much more compressed move. There's gold's a very large market, and so, but you can see for the most part, all the way into the fall, the metals are flattening out. So I would say if you wanted to do what I talk a lot about, the reverse fundamentals, then the reverse fundamentals will tell you there's nothing big's going to come out of this war, that there's not going to be any spikes from a geopolitical viewpoint anyway. It's just, but a lot of this that's being forecast is because of this parabolic rise that we got. And silver was that last, let's say from $100 up to 121, that was an insane move. And when the air came out of that, if you didn't read my silver report, if you go back, I think the Sunday, what week was that? Yeah, it would have been around January 20th. I put out a silver report, and there was basically, we got into one of these, what's called a parabola or parabolic curve. And when we got there, we hit the exhaustion point, and I literally called it 5 days ahead of time, almost to the penny. And all it was looking at the Fibonacci projections and some of the ranges that were out there, and then looking at, as I've said before, these parabola is a different regime completely. So all of the rules that you think you know about the markets do not work when these markets go vertical, up or down. That when you get into those ranges, you get to basically what I call air pockets, and they exist underneath some of these moves. They always end the same way. It's not like, it's not a phenomena that doesn't vary. Anytime you get into a parabolic curve, those new rules come into play. moving averages and PPMs and all that are useful. The PPMs are useful at extreme values, but when you get up into where there's no oxygen, then best way, it's when you run out of the energy that's driving it, then they just free fall because the buyers disappear and there's only sellers, and that's when you get the type of market we got. So this market has got this odd shapes, odd values that are running around it, and it's going to take a minimum of another 4 weeks, and it could take 2 or 3 months. We could be into the dog days of summer before we finally get this market normalized again. And like I said, at that point, we'll figure out which way it's going. It looks more flat, stable, probably, like I said before, $70 is probably the bottom end of that range. So finally, I talked about this last night. This is weekly. I want to go to daily. I said if we can break above that 40-day moving average, we did that yesterday, and we're seeing a little pullback here. And we also got an RTX sell signal. But you can see this was yesterday's market. We did get up to 71. There's still some possibilities as far as we're looking at 71. 540 was the projection. We printed a 73. Let me just look at what the ranges were here. 74. And so fib target 76 was target 1. So we fell just short of 76. And I also mentioned the 81 and 84 levels. I think that was probably about it from the standpoint of this run. We could still follow through into that 76, could print 81. It's somewhat unpredictable, but you also see that over on the far side here, you're seeing potential peaks in momentum, and typically, and even let me change the scaling a little bit here. So you can see that we got, here's that range I was talking about at 76, and then there's this 81 handle up here. And these red dots right here is a pivot. That's 81. So if we got over, we'll call it 81.5, then that would be a major breakout, and that would be substantial. I suspect that will be more of a ceiling than a breakout point, especially if it happens too fast. But this pattern is, as I mentioned last night, it's more positive than negative. We've got, see, here's one of those wedge conversions that we were just looking at all the indexes. You've got the 40, all this stuff was coming in. If you remember, if you go back probably last week's video or maybe a little further, when we were over here, that all where the solid lines are now are the reality of where the moving averages. This was the projection of the averages to come into one of these wedges. And I said, when we get there, that will be the point where we're going to have a breakout. And we saw this extreme level down here. We saw the algos were being projected out. So basically the algos called this slope in the markets from the standpoint of this rally that we got probably 2 weeks in advance. It was lining everything up that way. So we definitely got that move out, and it's come into play. The red dots are suggesting we're going to come back into moving averages. I would suspect that's probably pretty accurate as well. Go to the weekly for 1 second, then I'll come up for questions. Yeah, so we came down to almost a 200 week moving average. And then we're looking at red dots suggesting we're almost there. So we're looking at 74, 76 possibility. I'm going to put it a low possibility, maybe 30% getting to 81. All right, folks, come back up and let's just see what we can. I see maybe a couple questions. So give me the symbol that you want me to look at on the Canadian dollar, and I'll go through that. Dwayne, that's an interesting comment. Would be interesting to put the moving averages on your model overview. Yeah. Yeah, so if you have the indicators and you already know all that. I don't know how. Yeah, I'll think about that. It's a good question. It deserves some thought. Yeah. All right, I got the Canadian dollar up. So let me go over there. We'll take a look at that. So yeah, it looks like pretty restrained around 137. This is dollar versus Canadian. Looks like the dollar is going to continue to get a little stronger in here. Not a lot. I think the safe haven trade is probably still going to drive a little bit on the dollar. Now, Peru. Hey, Pedro, thank you. Yeah, Mike, you're probably right there. In fact, I would argue, I'm going to come back up. So the question was, stock market doesn't go down anymore. And in fact, they can't afford to have it go down much. So, maybe some of the fiat, like I keep telling you, the best hedge in the world is the S&P 500. I made that comment back in 2020 when we all met. A lot of us met back in 2020 during the pandemic. And I mean, I remember saying, well, we could even get to 5,000. This was in 2020. I think we were 1,900 or something, 19 something. And here we are at almost 7,000. So yeah, it was a good inflation hedge. Buffett's right. You could have just bought SPX and bought SPY, we'll say, and just stuck your head in the sand, and that kept you above water. So it just mattered whether you owned enough of it to make a difference is really all there was. But it was definitely a hedge on those dollars that you had invested in there. All right. Not a lot of questions tonight, so but I appreciate everybody. We got one more day. I thought I was going to have to go down to Phoenix, down to Scottsdale tomorrow. I'm not, so I'll probably do that Fridays, because otherwise I wasn't going to be able to get back in time to do the broadcast tomorrow. So I should be here. As far as I know, I'll be here. I'll let you know. Follow me on Twitter. I'm going to be changing my Twitter handle here sometime soon. I've got several big projects going, and some of you guys know my old trading floor nickname was Dr. Given. So I think I'm going to rebrand my X channel to Dr. Given. And yeah, I've been playing around with some fun things to do on that. So anyway, appreciate everybody watching. Thanks for showing up. Hit the like button, subscribe, tell your friends. Let's get the channel back in the day when right now I'd have 1,000 live. I miss those days. I know I was inactive for quite some time. So let's tell our friends that Bob's back online, and hit the subscribe, hit the notification bell so you know exactly when I'm coming. So folks, have a great evening. Have a good day trading tomorrow, and we'll see you tomorrow, same time. About 10, quarter after 8. See you then.